Hi, today I'm with Bluffton's most interesting people today, David Kroll, the Mortgage Network. You're really going to enjoy this interview. It's going to talk about market conditions, what you might be able to expect in the next few years. So keep watching and let's do this. So I'm here with David Kroll of Mortgage Network, and this is going to be a great video because David's been here since 1996 and he knows exactly what he's talking about. We refer a lot of clients to Mortgage Network and David, and I'll start by saying you were one of the original people in Mortgage Network in Massachusetts, right?
That's absolutely correct. The company began in 1988 as a mortgage broker. As it gained momentum in size, we became mortgage bankers, which basically means that we actually make the decisions to lend the money and then sell directly to Fannie Mae and Freddie Mac. So it means that at any instant in time, we absolutely represent the state of the market. There is no interest rate better than or less than what we're able to offer.
And how many offices do you have around the country?
We have Maine to Florida, I think 33 offices now.
Okay.
And we're very strong in Hilton Head, Bluffton, Charleston, Columbia.
Okay.
We like the Southeast.
Okay, and you're the regional manager for this
regional
area right here.
Yes.
Okay.
Yes.
Let's talk a little bit about the thing that I always harp on with a lot of clients coming down here from the north about using more local lenders, bankers, brokers. So can you address that?
Absolutely. We advocate the same position within our company. In other words, if I'm asked to write a mortgage in Massachusetts, I'm perfectly capable of doing so, but I defer to my compatriot in Boston or my compatriot in Hartford, Connecticut.
Right.
It cannot be overemphasized. The Rocket Mortgages of the world and the national internet advertisers simply don't know the intricacies of this market, and those are important intricacies.
How many villa complexes are there?
There are 236 different condominium associations, each of which has its own intricate set of rules.
And tell them about what you told me about the Sea Pines situation.
Just an easy example: if you were buying a condominium in Sea Pines, the outside lender would first have to contend with what the heck Sea Pines is. It's a planned unit development, a PUD. It has all of its own rules and regulations, its own street agreements, its own property owners association, and then inside of that there's the condominium association with all of its own rules and regulations and its internal homeowners association. The outside lender never gets through that maze. Quite frankly, we as realtors and as local lenders really have to work hard to sort the maze out.
Right.
I mean, we each and every time it's careful, intricate analysis. So the outside lender is dead in the water.
And you had somebody, a lender, wanted to know about what the road.
Yes, there is a master agreement in Sea Pines. It's the Sea Pines road agreements, and
you got all the way to closing. You wanted to know about the road agreements.
Road agreements, and I don't think anyone's ever seen the road agreements for Sea Pines.
I had a situation like that. I was selling a home in Kalawasi Island. At the last minute, the lender from up north said, "Wait a minute, are those public or private roads there? What is that?" Run into all kinds of things like that. Talk a little bit about the rates right now on what you offer your clients.
Interest rates are bouncing on an all-time low at the moment. The rates for 15-year fixed rate money range as low as 2 3/8%. for 30-year fixed rate money at 2 7/8%, 2.99%. Just to give you perspective, these are the lowest rates in over 50 years, and they've been bouncing there really since the 3rd or 4th month of COVID. So they've been bouncing on the bottom now for 13 months, 14 months, and they're expected to stay reasonably low. I hear a lot of clients worried about, well, gee, what's going to happen if we don't get a house today? What's going to happen next year? What's the new administration going to do to cause higher rates? The truth of the matter is that the Federal Reserve has little or no incentive to raise rates. The government has a massive amount of debt. The government will have to pay those rates. The Federal Reserve has little incentive to raise them.
Okay.
So we're going to see a stable rate market for at least the next 12 to 18 months. Maybe inching up 1/8 or 1/4 or 3/8%, but nothing that will affect us dramatically.
Okay. And another question for you, because people shop around different mortgage bankers, brokers, best rate, and talk about what did you say, the naked?
Yes. Well, there is a Fannie Mae acceptance rate and a Freddie Mac acceptance rate. Fannie and Freddie control about 70% of the mortgage market in the United States. It's $1 trillion mortgage market. And that acceptance rate is the interest rate prevailing. All other interest rates are fictitious. So at the moment, the Fannie Mae acceptance rate is just over 2.8%.
Okay.
Any rate below that means that you're paying a 1/4 of a point or a 1/2 a point or a point or a point and a half. Basically, you're bribing the lender to lend for a lower rate.
Right.
If you pay more than that rate, then you're being gouged.
Right.
So one way or the other, the Fannie Mae acceptance rate is a true rate. There really is out there in the world a true interest rate. It varies by the minute all day long, but it's within a very narrow band.
And if somebody comes to you and says, I have a great rate and it's this,
Yes.
you can match that, but it's just you got to do your calculation.
It takes me 5 minutes and I
Yeah.
can match the rate.
Okay,
Yes,
right.
yeah.
So when someone says, gee, I got the best rate over here,
Yeah. It's just a matter of doing a little forensic calculation to see where the money is being charged or
Right.
where the money is being given.
Right,
Yeah,
okay.
Yeah.
Another question about the market. Everybody wants to know about the market, and you study it every day.
Every day.
And
yeah.
your company studies it every day.
Yeah. We literally spend hundreds of thousands of dollars a year asking that exact question.
Right.
Because we need to make forward commitments, financial forward commitments, in order to be able to match rates to the market all
Right.
day long, every day.
Right.
The market is very interesting at the moment. It's a demand market, meaning that there are more people seeking housing than there are houses.
Okay.
That caught everybody, the mortgage bankers of the world, the policymakers in Washington, Wall Street. It caught everyone a bit by surprise, because what happened was that for the last 12 years, every year, year over year, there have been more people entering the market than houses being produced.
Okay.
And the net effect of that is an enormous gap.
Right.
COVID was in effect a 52 pickup. Everybody got the itch all at once.
Yeah, they did.
If you didn't want to, maybe you wanted to move from the north to the south. Maybe you wanted to change jobs. Maybe you wanted to work remotely rather than at the office.
Right.
Maybe you wanted to change who you live with. Everybody wanted to do something different.
Right. At the
And
same time.
At the same time.
Right.
And this has caused a bit of a frenzy, but underlying that frenzy is a stable demand-led market, which is going to persist, according to all of the housing statisticians. It's going to persist for at least the next 4 to 5 years.
Okay.
Of a greater demand than there is supply.
Not the frenzy.
Not the frenzy. what we want is a stable market, and I'm happy to report that that certainly appears to be what we're going to have for the next 4 or 5 years. So if you're buying into this market at $800,000, a house that sold 2 years ago for $550 or $600, are you paying a premium? Yes. But is that $800,000 house going to collapse in value? Absolutely not.
That's better than what I could
Yeah.
say right there,
Yeah.
because
Yeah.
you study it.
Yeah.
I
Yeah.
basically make up stuff all
Yeah.
the time.
Yeah.
But anyway, you would know.
So don't be looking backwards and being disappointed about missing the 550.
Yeah.
The reality is that there aren't enough houses, and that adjustment was probably a necessary adjustment. It's going to creep along and go gently up and down with an upward trend from here. for
And I
4 or
do
5
people
years.
have people say that I think it's cheap.
Yes.
You probably have that, right?
That's another really curious what is it? A feature of our market. If you if you do comparable housing in any of the nice East Coast locations, they are 1 to 3 times more expensive than Hilton Head still.
Ah, yeah.
So
yeah.
if you sell
Yeah.
if you sell your house in New Jersey, you're in a small house in a neighborhood, and you sell your house for $800,000 or $900,000. You're going to buy what feels like a palace here.
Yeah.
You know,
That's true.
So it's very interesting. We are still great value for money here.
And do you see this video is being made around the 3rd week of September 2021? Do you see any type of a slowdown whatsoever? What about the frenzy still going on? Or?
It's very hard to predict that with any precision, but if I had to bet, the frenzy will die off, and certainly as we enter the holiday months, and coming into spring, we will have a solid demand market, but without the 8 or 10 or 12 people bidding on a single house.
That's great. Yeah, yeah. That's
Which doesn't serve.
Yeah.
Which doesn't serve any good purpose.
Right, exactly. If you would like to use David, you can get a pre-qualification letter in 24 hours if the right documents.
Absolutely. And in 24 hours, we take your information, pull your credit. If you're self-employed, we get your income tax sent to us overnight, and you've got a pre-qualification.
Okay.
If you're employed W-2, we can have it within hours. Then you're off and running and seeking property with assurance, and with the realtor who's serving you having assurance that you're a qualified client.
And the next step would be a loan commitment.
You enter into a contract, the clock starts ticking. Within 21 days, we've got a legally binding commitment that we've made.
Within 21 days.
Within 21 days.
Maybe sooner.
Absolutely.
Okay.
If the appraiser does his job on a timely basis and everything comes together, less than 21 days.
Good.
Yeah.
Okay. I think that wraps it up. Do you want to say
Perfect.
anything else? Or?
No. I want to make it clear that this is a much more stable market than what the last time we had a so-called boom.
Yeah.
This is a market you can trust. It's going to run for 4 or 5 years, and at a value point which is better than most high-end locations on the East Coast of the United States.
Yeah, I've heard that before. Yeah. So I'm going to put David's contact information below in this video. If you would like to contact him directly, please do so. I'd be happy to help you out. His phone number and email. And when you come down here.
I mean, we're in Bluffton. We have another office in Hilton Head.
Okay. All right.
Easy to find. Just give us an email. Shoot us a short email, and we'll get immediately in touch.
Mortgage Network, the place to go. So anyway, thanks for watching. And when you come down, we'll find your dream home and we'll hook you up with David.
Super.